And coming up on Business Incorporated, South Africa money managers set for early pension access. And Zimbabwe signs $1.3 billion field pipeline agreement with British firm. Egypt at risk of losing $2 million daily to UK travel red list. Thank you for joining us. I'm Ladi Williams, and this is Business Incorporated. We kick off with market numbers now from Africa, where markets were tracking, were in the green at intraday. Nigeria's main index was up marginally by 0.04%, while South Africa's benchmark index edged up by 0.13% at intraday. Elsewhere, Egypt was still closed for the Islamic New Year holiday. Kenya closed Thursday's trading session positive. Over to the Middle East, where the Abu Dhabi and Dubai's markets are still closed for the Islamic New Year holiday, while Saudi Arabia index closed marginally down by 0.01% in yesterday's trading session, while the Qatari index closed Thursday's session positive, up 0.04%. And over now to Europe. European stocks headed for the longest streak of record closes since 1999 as strong earnings and economic reopenings boosted cyclical and luxury shares. Let's cross over to Frankfurt now with Conrad for more. Great to have you, Conrad. Well, the largest stock exchange on the European continent, Frankfurt, has gained around about 1.5% in the course of the week. Not bad for a market that's on record levels.
Not bad at all, Ladi. And on this Friday, the 13th, for the first time ever, the German index DAX has climbed above 16,000 points. The reasons for this are various. Many German companies have managed to post strong earnings reports for the second quarter, for the months of April, May, and June. And the outlooks in these reports are also mostly pretty optimistic. Most businesses here in Germany are convinced that as soon as Germany really has reached or will have reached the targets in terms of vaccinations against the coronavirus, the economic recovery in the country will become even stronger. What's also, of course, fueling share prices is the monetary policy of the central banks. It's very generous, and there's no sign that this is going to change. This, of course, too, is fueling demand on the German stock market.
All right, and Tesla back in the news again. Elon Musk is on tour in Germany, and he has a meeting with the political candidates who might succeed Chancellor Angela Merkel. What would they be talking about?
Well, probably they will be talking about this Tesla factory, which is currently being built not far away from Berlin. Elon Musk has at several occasions complained that, the building and the permission for this building is going too slowly, that this should be accelerated. Now, Musk might not be aware that a German chancellor is actually a powerful politician, but for projects like this factory, you have to go to the regional and to the local authorities. These are the ones to give the permissions. And as this factory is basically built in the middle of a forest, of course, many environmental questions are also being touched here. And as you know, environmental questions are very important for Germans. So I guess Elon Musk here, in this case, he actually gets a lot of money from the German taxpayer for the fact that he builds this factory here in Germany. He has to learn to play by the rules a little bit.
Right, and Elon is a big proponent for climate change. Well, in China, the third busiest port has been partially shut because of a corona case. Any ripple effects of this in Europe?
Yes, Ladi, I can tell you about the ripple effects. I went to an IKEA store last week, not on business, but to shop for stuff. And about 1/3 of what an IKEA store here in Germany usually sells was not available. And the staff told me that this has to do with China, with the fact that many products are currently being stuck somewhere on the way between China and Germany. And also, when somewhere in the world a factory has a corona case, it often closes down. So, of course, the factory cannot deliver. Now, of course, the discussion is going on here in Germany whether the country should become more independent from the worldwide supply chains. A majority of economists here in Germany are convinced that this wouldn't be a viable way. It would make, if we bought less products from China here in Germany, it would have a very negative effect on consumer prices. And also, Germany's economy is one of the most interconnected worldwide. Our exporters, they need the supply chains and the distribution chains as well. So this is likely to be a temporary problem that eventually will go away again.
Right. All right. Thank God it's Friday, Conrad. Enjoy your weekend. Always great to talk to you.
Thank you, Ladi.
All right. Let's head over to London now with Juliana. Juliana standing by there. Well, great to have you, Juliana. Well, sterling on track for the second week decline against the dollar, while the FTSE 100 is on track for the longest winning streak since November. How's the market looking this intraday?
Good afternoon, Laddie. Well, we've had over the past couple of weeks some pretty decent set of trade updates, first half updates, Q2 updates and early Q3 updates. So what we're getting is investors from across the world pumping billions of pounds into these value stocks, which is why the FTSE is doing good. And when the FTSE does well, because of course the FTSE 100 is internationally focused, that pushes down pound sterling, which is why we're seeing an upward trend and a downward trend. So the all share at intraday is up 0.35%. The FTSE 100 is up 0.41%. And the FTSE 250 is up by 0.17%. In the currencies market, as you were saying, the British pound down again on the US dollar by 0.07%, also down on the euro by 0.25%, and down on the Japanese yen by 0.23%.
All right, now to Amazon Studios. Multi-million-dollar Lord of the Ring TV series is moving to the UK from New Zealand for its second season. What are you hearing about this?
Oh, well, we're hearing lots of moaning and crying on Twitter, but this is a massive blow to the Pacific nation. I think New Zealand have had a relationship with the Lord of the Rings franchise since the original movies. For 2 decades, it's brought billions of pounds, dollars to the New Zealand economy. They just wrapped up season 1 a couple of months ago. The next season was due to be filmed next year, but of course, and I believe I did report on this on Channels Business Global earlier this week, New Zealand's Prime Minister Jacinda Ardern has said that the borders are going to be remaining closed until at least the end of this year. Does that have something to do with it? Possibly. The Amazon series has about 2,000 staff. Of course, it costs billions of dollars to make. Tax breaks were given to Amazon to ensure that they would continue the series in New Zealand. But alas, the producers have pulled out. For Britain, this is a massive, massive coup. The film industry has been pretty much dormant over the past few months. They have also been dealing with COVID restrictions. So to get a franchise as huge as The Lord of the Rings is, wonderful for them, but really terrible for New Zealand.
Yeah, quite big. Well, it's the end of the week. What economic data are we expecting for next week?
It is the end of the week. Thank God it's Friday. But no, next week, a big one. The story of next week is going to be about UK inflation data. Last week, when the Bank of England Monetary Policy Committee met, the upward trend was a massive talking point. Now, inflation here in the UK currently stands at 2.5%. Of course, this has got a lot to do with pent-up demand and blockages because of the global chip shortage. But some economists actually believe it could reduce. It could go down to between 2.3 and 2.4%. So that is going to be very interesting. We have had a look at some of the PMI data and some of the early indicators for Q3 showing that consumer spending is growing. Perhaps when it does start falling, prices do come down. So we'll just have to wait and see. I'll be watching and waiting from my holiday destination, Laddie.
Right. I'll be watching right here at work. All right, Juliana, thank you. Enjoy your weekend. Thank you.
Thank you.
Moving on now. South Korean stocks led losses among the Asia-Pacific markets on Friday. Trade as the broader Kospi in South Korea was down by 1.4%. Elsewhere, Hong Kong's Hang Seng Index slipped 0.7%. Mainland Chinese stocks were also lower as the Shanghai Composite dipped 0.25%. While the Shenzhen component declined 0.57%. In Japan, the Nikkei 225 was flat while the Topix Index traded 0.22% higher. Over in Australia, the S&P ASX 200 edged up 0.48% as investors watched the coronavirus situation. The country's capital, Canberra, entering a week-long lockdown from Thursday after a COVID-19 case was identified. And over to the U.S. now. Stock futures held steady in early morning trade on Friday as the S&P 500 seeks to end the winning week on a high note. Futures on the Dow Jones Industrial Average rose just 20 points, while S&P 500 futures and Nasdaq 100 futures both hovered above the flat line. The blue chip Dow and the S&P 500 are on track to close out a winning week after gaining 0.15% and 0.7% respectively. The tech-heavy Nasdaq Composite also gained 0.03%. However, let's see how the market closed yesterday with our U.S. correspondent, Maria Bird.
Met estimates on Thursday. Producer prices slightly rose. Stock traded mixed to trade nearly all-time highs as investors took into account more mixed economic data and considered the likelihood of more government spending on infrastructure. The Dow held lower midday on Thursday, while the S&P 500 and Nasdaq turned slightly positive. The moves came after a new report on weekly jobless claims met estimates, while a separate print on producer price increases came in hotter than expected. Heading into the session, one of the latest sources of fuel for equities came after Labor Department's monthly Consumer Price Index showed the prices rose in line with expectations in July, gaining 0.5% month on month to decelerate from June's gain. Prices for used cars and trucks and airline tickets slowed markedly, underscoring the moderation in inflationary pressures as the economic recovery matured. An initial wave of pent-up consumer demand was released. Meanwhile, the passage in the U.S. Senate of a $1 trillion infrastructure bill earlier has further boosted cyclical stocks like industrial materials, given these companies stand to gain directly from the increased government spending on physical structures. The chamber also voted to approve the framework for a $3 trillion budget resolution that would address a more expansive set of healthcare, childcare, education, and climate change initiatives, central to the Biden administration's goal.
All right, that's Maria Bird, U.S. Our correspondent in the U.S. there, giving us updates from yesterday in Wall Street. Moving on now, East African Community Secretariat is keen to harmonize the region's common external tariff to protect industries within the bloc and boost intra-EAC trade. Well, we have Mercy Milanoy joining us now, a business reporter with Mula Media. Great to have you, Mercy. Hello, Mercy.
Thank you so much for having me. Hope you're well.
I'm well, thank you. Well, what are the expectations of the business community with this harmonization process?
Well, first of all, there has been a lot of discussion concerning it, and even as recent as this week, where the East Africa Community Secretary General, Peter Mathuki, was marking his 100 days. And one of the main things that were being discussed in that particular meeting, of course, is non-tariff barriers, especially between the East African countries. The other thing also is the common external tariffs that have been in discussion for quite a while. Now, currently, there are three bands of the external tariffs. There are those countries that have proposed 0%, others 15%, others 25%. But if you look at, especially for Kenyan manufacturers, Kenya has been on a trajectory to promote local manufacturers. And for the Kenyan manufacturers, they're calling for a fourth band of 35%. And this is in line to simply boost the efforts that have been there to promote Kenyan manufacturers and also their goods. Considering that also the trade deficit in Kenya is quite high, it's at 9.4 billion USD. And of course, we are importing a lot more than what we are exporting. And of course, we find that a lot of manufacturers, local manufacturers, not only in Kenya, but also in the East African region, have been raising their voices against a lot of imports, and especially on goods that can be easily manufactured not only in Kenya but also the region. So currently, the conversation as early as actually this week has been on how to close the trade deficit, and one of the ways is also to work on the external trade tariffs, and of course this is just to protect local manufacturers and to ensure that we consume our own.
All right, Mercy Milanoy, thank you so much. Business reporter with Mula Media. Thank you so much for joining us on the program. Thank you. All right, we'll go on a break now. When we come back, we'll look at happenings in South Africa. That's in a moment. Do stay with us. Welcome back. Statistics, South Africa says manufacturing production in the country grew by 12.5% year-on-year in June, though growth has been at a slow rate due to the impact of a COVID-19 pandemic and the recent civil unrest in South Africa. Let's talk to our South Africa correspondent now, Brian Fugeni, joining us all the way from Johannesburg. Great to have you.
Good afternoon, Ladi. How are you?
I'm fine, thank you. Well, as South African manufacturing output fell on a monthly basis for the third consecutive month in June, what contributed to this decline?
Well, we have to look at the third wave of coronavirus infections really contributing, and the country being moved back to level 4 lockdown, which really did hamper production in a lot of places. A lot of production companies not operating at full 100% capacity, most operating at 50%. So the level 4 lockdown really did have a huge impact on the manufacturing industry for the 3 consecutive months from May, June, and July as well.
Well, compared with June last year, when lockdown restrictions were still curbing a lot of economic activity, the data looked pretty good, a 12.5% increase. What does this tell us?
Well, what that tells us is the consecutive lockdowns, the ups and downs from level 5 to level 4 to level 3 back to level 4 is really disrupting a lot of production and economic recovery as a whole. So we're looking at, as we go further with less reductions in the COVID-19 numbers, that the production will really rise from the 12.5, because 12.5 is an increase, but as SA notably stated, it's quite slow, and that's not where the country wants to be at the moment.
And the slight dip in business confidence in July was less severe than expected following the riots and lootings that engulfed Gauteng and KwaZulu-Natal last month and caused billions of rands of damage. How are businesses adjusting to these realities?
Well, at the moment, a lot of small to medium businesses are the ones who are mostly affected. We saw a lot of them closing down. But at the moment, we're seeing companies like ShopRite, the bigger companies, reopening stores. ShopRite announcing that 89 of their stores are back operational. So the big companies are really back up on their feet. But the mostly affected companies are the small to medium ones who are still waiting for insurance to cover their claims. But most of them are really out of business, and that's an unfortunate part.
All right. What economic data are you expecting for next week in South Africa?
Well, Stats SA will be releasing the Consumer Price Index, which we're looking at closely after increases in June. So we are hoping that in July that trend will continue. And they're also going to release their retail and wholesale trade sales index, which we'll see, especially after the recent unrest. We'll see how that industries were really affected. And also, we're going to keep an eye on the rand, which has been really weakening this past week, but showed signs of recovery today. So hopefully next week, it will continue in that upward trend.
All right. I also see the South Africa money managers are set to continue some kind of early pension scheme. What are you hearing about this?
Well, the early pension scheme is still on the ropes. A lot of people are saying it's a bad idea. This was announced by the former minister, Mr. Tito Mboweni, saying people can't be allowed to to access some of their pension even as they're still working. But a lot of analysts are saying that would be a bad idea because people would dip into their savings prematurely. So it's still, people are still on the rope with that. We'll see how it goes, especially with the whole COVID-19 pandemic. People are still being affected by that. So people really want to dip into their savings and their pension.
All right, Brian. Always great to talk to you. Thank you so much. Enjoy your weekend.
Thank you so much, Ladi. Same to you.
And the Egyptian economy could face daily losses of more than 31 million Egyptian pounds if it stays on the UK's travel red list, according to a research conducted by the World Travel and Tourism Council. Is in 2019 levels, Egypt's status as a UK red list country will pose a significant threat to the nation's struggling travel and tourism sector and overall economy. According to the pre-pandemic figures, UK visitors represented 5% of all international inbound arrivals in 2019. UK was also the third biggest source of market for Egypt, only just behind Germany and Saudi Arabia. However, the WTTC research shows that the red list restrictions are deterring UK travelers from visiting Egypt. And Zimbabwe has signed a $1.3 billion joint venture agreement with British-based Coven Energy to develop a fuel pipeline from the Mozambican port city of Beira to the capital city Harare. The pipeline would complement the existing one that also links Harare and Beira and makes landlocked Zimbabwe a fuel hub for the southern African region. Listed Coven Energy will form a 50-50 joint venture company with state-owned National Oil and Infrastructure Company. Zimbabwe has struggled with acute shortages of fuel due to perennial shortages of foreign exchange, but supplies have improved in recent months after the government allowed companies to sell the commodity in US dollars. And oil prices fell for a second day early on Friday after the IEA warned that the demand growth for crude and its products had slowed sharply as surging cases of COVID-19 worldwide has forced governments to revive restrictions on movement. Brent crude was down 0.4% at $71 a barrel, while U.S. crude was off by 0.5% at $68.76 a barrel, having fallen 0.2% on Thursday. Meanwhile, OPEC, in its monthly report on Thursday, held to its forecast for a rebound in oil demand globally this year and further growth in 2022, despite the rising concern about the surge of COVID-19 infections. And gold prices were flat in early Asian trading Friday as a firm dollar set ease in early tapering bets. Although the precious metal was headed for a second consecutive weekly decline, spot gold wasn't changed. It's down 0.5% so far for the week, while U.S. gold futures were up 0.2%. Similarly, silver rose 0.2% to $23.19 per ounce. Meanwhile, platinum fell 0.2% and palladium eased by 0.3%. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.